The stock market, humanity's grandest gamble, began in 1602 with the Dutch East India Company, which for the first time allowed ordinary people to buy shares to fund perilous global trading voyages, creating the world's first stock exchange in Amsterdam. What started as a practical solution to raising capital quickly morphed into a theatre of human greed and ambition, where fortunes could be made or destroyed overnight, and speculation often outweighed rational investment. By the 1700s, Europe was swept by manias like the South Sea Bubble and the Mississippi Bubble, where investors poured money into companies with little substance, driven by the intoxicating belief that someone would always pay more tomorrow. A lesson even Isaac Newton learned the hard way when he lost a fortune and admitted he could calculate the motions of the heavens, but not the madness of men. In the 1800s, Wall Street emerged as the beating heart of America's growing economy, fueled by railroads, steel, and oil, and dominated by robber barons like Vanderbilt, Carnegie, and Rockefeller, who used market manipulation, monopolistic practices, and sheer audacity to amass unimaginable wealth while crushing competition. The roaring 1920s saw similar frenzies as ordinary people borrowed money to invest, convinced the market could only rise, until the catastrophic crash of 1929 plunged the world into the Great Depression, forcing governments to impose oversight with institutions like the SEC to prevent total chaos. Post-World War II, markets expanded with industrial growth, technological innovation, and pensions, democratizing investment, only to be transformed in the late 20th century by computers, electronic trading, and the internet, leading to frenzies like the dot-com bubble and massive losses in 2000, followed by the 2008 financial crisis triggered by reckless lending and over-leveraged banks, reminding the world that human error and greed remain constant forces. Today, the stock market is faster, more complex, and more unpredictable than ever, with algorithms executing millions of trades in milliseconds, retail traders on apps like Robinhood able to move entire markets, and cryptocurrencies adding new layers of volatility. Yet the fundamental lesson persists. The stock market is a mirror reflecting human ambition, fear, and folly, rewarding innovation and risk-taking while punishing naivety and hubris, proving that while the instruments of trade evolve, human nature, greedy, hopeful, reckless, remains eternal. From the canals of Amsterdam to the digital trading floors of New York, Tokyo, and beyond, the market tells the story of humanity itself. A relentless saga of ambition, speculation, triumph, and ruin, showing that money may change form, but the desire to risk, to dream, and to bet on the future never does. And as long as people seek fortune, the stock market will continue to serve as both a stage for brilliance and a warning of folly, endlessly repeating its timeless cycle of boom